In this video, I want to show you some of the trades that I did on the Euro New Zealand over the last couple of days, and my objective here is to show you that these are easily identifiable patterns that repeat. Okay. Now, the first thing, as I have mentioned before, is I like to trade in the New York session. My platform has these indicators to show me visually where those sessions are. You don't have to use the platform. I'm using MetaTrader 4. Okay, you can use TradingView, any other charting platform that you have. New York session starts from 8 a.m. and finishes at 11 a.m. It's a 3-hour session. Okay, now one of the key things I want you to realize is this here, right there, prior to the open of the New York session. Any move prior to the session is false, right? That's a generic statement. It's not always true, but that is typically the behavior. What I like to see prior to the open, what really gets me excited is a dump, right? A move down prior to the open of a session. Okay, now what's happened here? Let's really understand. We can see that the market, number one, as I said, let's look at a few things here. So number one, we have made a move up, which is false. Okay, to move up, that's false. It's prior to the session. Number two, prior to the session, we've got a dump. Okay, so immediately when I see that, I get interested in the market, and I want you to notice also that, let me see if I can draw a line here. This here is the previous day low, okay? And so what has the market done? It's come down into and taken out that previous day low, okay? And then immediately after doing that, it's moved up, right? So it basically rejected that breakout. A move below a previous day low, all right, as I've shown you here, is a breakout. Now, that breakout is a false breakout if the market then comes back inside of that particular previous day low, as it's done here on this day, okay? So a lot of things there to think about. You've got to take all of this into consideration, okay? It's not just that the market has made a new low. That's not what we're talking about. It's not just the fact that we have broken a previous daily low. That's not the only thing to consider, right? The most important thing that gives me the indication is this thing here. This move, which is false prior to the session, and it's made up of a little move up followed by a move down, okay, leaving a swing high. That there is a swing, right? It's a swing high. It's a false move. So it's doing a couple of things. You really got to understand how the market works, right? Because the market is looking for money, right? Liquidity to fund the move up. Let's talk about what's happening here, okay? I'm taking you a little bit off track to really what I want to show you, but I want you to try and understand how to identify these movements by understanding what the market's trying to do, okay? What the market's trying to do here at this level, it's enticing buyers to get in because that there is the low of the previous day, okay? Notice that it takes out that low of the previous day very shallow, right? Just a couple of pips below that previous day's low, okay? Then it starts to move up, right? We get this move up, and that entices the buyers to get into the market, okay? Now, immediately, so they are basically at that point in time on the right side of the market, but then what happens? We get a move down that scares out all of those buyers that bought down here at the low of the previous day. They basically have been stopped out. They've been stopped out with this move to the downside, right? even though when they bought here with this move up, they were actually on the right hand side, but the market has stopped them out by going below their entry. Okay, so that's important. Now, what happens is when people buy at this level, when the market starts to move up, right, those buyers put their sell stop orders down here to prevent incurring large losses in case the market moves down as it did on this day, right? So they've been stopped out. Now, when a market is looking to move up, it actually moves down first. That's what you've got to realize. Okay, it moves down first because it needs to buy down here from willing sellers. Why are there willing sellers there? Because as I said, anyone that bought here has got their stops under that low, which means they are willing. So they are offering these banks who are looking to buy down there, right? So they are looking for folks who have their stop orders at that level to buy from, okay? Just a side note, but the key point is, irrespective of the theory, okay, the key here is, the first thing is you want to see a high prior to the open of the market. As soon as I see that, I'm already thinking that at a minimum, the market's going to go out to, at a minimum, stop out anyone that may have been short from that level, okay? So even if somebody was short from that level, even though there's no reason to be short at that level, at a minimum, the market will go through those stops. Because if you're short from here, right, you're going to have your stops above that level, okay? And that's what the market needs to fund its move higher, okay? So a lot of theory there, but number one, I want to see that, okay? If I don't see that, with this move down, this dump down, I'm not going to buy the market for a move up, because I need some level here on the way up to be taken. There needs to be a reason, right? It's called liquidity because there's money up there. There needs to be a reason for the market to move up from this level here, okay? So that's key. That's very important. Now then, what's important is, where has the market come down into? Well, it's come down into a level that's below a previous day low. When has it done that? Time is very important, okay? This here is all happening right at the start of the New York session, okay? So timing is very important, okay? So what I basically refer to this as is a false break reversal. Why is that a false break reversal? What I want to see is a move down, okay? There's the break. It's false, and it's a break of that previous day low, okay? Whoops, it's a break of that previous day low, this level here, okay? So a move through there is a breakout. It's false when that move does not continue down, right? It actually, you can see, immediately comes back inside of the range. What do I mean? What do I mean by the range? Well, it's back inside the low of that previous day. Okay, so that's why it's a false break. Why is it a reversal? Well, what I want to see is exactly what we're seeing here. Okay, so I want to see the false break. Well, firstly, it's the break. It's false when it comes back inside the range, and then I want to see a pullback back into anyone that may have bought at that low. Okay, so there's three things there that I want you to look at. There is the break, which is false when it comes back inside, and then look for a pullback into those people that may have bought, and the pullback is this little wick that comes back down, and it's coming back down into anyone that may have bought on this candle here going up, to scare them that, hey, this is actually coming back down. Okay, so it's a 3-bar pattern, right? You get a break, that's false, you get this move up, and then you get a pull back into anyone that may have bought, and then take off. Okay, that's what we're looking at. That's the pattern. Again, repeating, the first thing I want to see is this. It needs to be before the open of the session, which is this yellow box. It's automatically drawn on my platform. You don't have to draw it on automatically. That is 8 a.m., right? That session starts at 8 a.m. So just look at your charting platform. This is New York time. So New York time, 8 a.m. is that particular start of the session. So if you don't have the yellow box, that's fine. You don't need the yellow box. Okay. So that's where I bought, and my target is the high of the previous day, which is there. Again, I've got these drawn automatically on my chart just to make it easy for me. Okay. But you don't need these indicators. You can visually see on your chart where that high is. Okay. So for example, if we look over here, on this day, right, this is Friday, okay, you can see that there is a high of the previous day automatically drawn, which is drawn from this high, okay, and then there is also a low on this current day, which is the low of the previous day drawn from here. That's all that is. You can draw them manually. You don't need to have these tools. These tools just make it easier to visually see what's going on the charts. Okay, so understand the pattern, right? To find these in real time, you've got to practice this stuff. You've got to go back and look at the chart, look at it on your own computer, so that your brain is learning how these charts are going to look like on your own computer, whatever you're using to view the currency. Okay, that you're looking at the pair. You need to look at it on your own charts so that your brain identifies these in real time when you're looking at it on your own charts. Now, let me show you the actual trade on my journal. I do that so that you know that this is not just theory. It's not looking at it in hindsight. This is how I trade. It's possible. That's why I show you the trade journal, so that you know it is possible, okay? And you need to come at a level by practicing and being able to identify these in real time, just like I am. So that's why I show you the trade journal. Let me bring it up. So there it is. Let me just make sure you can see that. It looks like it's cut off on the screen. So let me just adjust the screen there. So there it is there on the screen. For some reason I can't make this bigger, but you can see there is the high that I like to see first. Okay, there is that dump, okay, going below the previous day low, okay, and then you can basically see it's that same. You get the dump, then that little false break up, and then a little move down, okay, and then obviously the rocket, okay, and you can see where I closed, right, very close to the target, which was the previous day high. Okay, nice profit there. I like to show the journal, as I said, because it brings it real. Okay, it lets you see that these can be identified in real time, and they are real trades. We're not looking at these in hindsight. This is exactly how I traded that particular opportunity. Okay, now I want to move on to the next example, which was on the next day. And we have, so this is now on the Friday. This was yesterday's trade, again on the same instrument. And I want you to identify, we have a very similar pattern as to what we had the day before, right? So there's that move up, okay, prior to the session. So this time the session is London, right? That's the session I traded yesterday. Now this one combines a couple of other things that I have taught on the channel. It introduces the entry technique using a gap, right? If you don't know what a gap is, I've highlighted it there in a square in a box there, go and look at my video on the Euro scalping strategy, and that'll teach you what these gaps are. But basically, if you look at these three candles, a gap is made of three candles, a candle on the left, a candle in the middle, and then a third candle on the right. And in between those two candles, the middle candle has price moving up, offering only buy side delivery, leaving a gap that needs to be balanced, where the market will come back into sometime in the future. We don't know when, but basically when it does come back down to that level, as it has done at the start of the London session, then that often offers a turning point. On the way down, that's often a support level, okay? And on the way up, that is often a resistance level like we see here, okay? So a same kind of setup, not as clean as the one that we just walked through on this side, but very, very similar attributes. And that's the idea. You won't find setups that look exactly the same all the time, but the patterns are repeating. So we have a high, right, prior to the open of a session, which is London in this case. Okay, London is from 2 a.m. to 5 a.m. New York time. Okay, this time we have the market coming into a dump into a key support level identified by the gap on the chart, which is that box. Okay, now from there I have identified a reversal. Okay, basically the level is holding. We can see that from the wicks. Okay, these wicks that we can see coming into that support level at the start of London. Okay, so let's repeat what we're looking for. We want to see prior to this session a move up, which is basically a false move. Okay, a high that's then been established, and a dump prior to this session, and that dump has to be coming into the start of a session like it did yesterday or the day before at the start of the New York session. Okay, and there needs to be a reason for it to be coming down there. On Thursday, the reason was it was a breakout to below the previous day low. On last night's trading, Friday, it was to come and balance and market that was imbalanced with this gap, and it's at the start of the session. Okay, now that was my buy level, and my target was this gap here. As I said, on the way down, a gap will typically offer a turning point support, and on the way up, a gap will offer resistance, basically a turning point. Okay, so you can see again we've got three candles here, right, that make up this gap. So you got a candle on the left, a candle in the middle, and a candle to the right, and in between those three candles you can see there's only downside price delivery. There's been no price moving back up into that area, and so the market at some time in the future will need to move up in there as it has done here. Okay, once it's done that, that is a potential turning point, because a gap on the way up is often resistance. It doesn't always do that. Sometimes it'll go through and then that becomes support and it'll continue. You just got to look at the trade, look at the time, and manage your trade. Okay, now my exit was somewhere around about there. Okay, so I bought here, sold there. I think it was 20-25 pips, and that's all these are. These are scalp trades. Okay, as I've discussed in my Euro scalping strategy. And I exited there because I ran out of time, right? The session ended. I didn't want to be in the trade during this gap time. Okay, even though the market did move up into my target level, which was this gap. But you can see that it's a good exit, because at that point in time, that level certainly was a turning point, and then the market went back down. And so if I held on to that, if I didn't exit at the end of London, then I would have given up all those profits. Okay, again, as I said, I like to show you the actual trade journal so that you can see that it was a real world case study, so that you know that this is possible. This is how I trade. This is not hindsight. So let me pull up the trade journal. So there's the trade journal. You can see that I've marked this out for myself. There, right there, that red circle is that fake move up. That's offering the downside dump. Okay. Textbook entry into the gap, and as I said, I closed it close to the end of the London session because I did not want to be inside the gap time there. Okay, nice profit. Again, it's 20-25 pips scalp trades. That's what these are. And there was an opportunity to also then trade this back to the downside, which I did not. Okay, but this would have been a nice move up, false break, reversal, and then you can see it's pushing back up into anyone that was already short for a continuation down to the low of the week. Okay, this was the low of the week, so it would have been a nice entry to go short from that as well. Okay, so some nice trades there. Euro New Zealand move up on Thursday, move up on Friday. Key similarities: you've got this false move prior to the session. Okay, you've got a dump down to a key low, right, at the start of a session, either London or New York, because we're trading the euro. Okay, same thing on last night's trading. You got this false move up, you've got this dump into a key level, okay, and then that's at the start of the London session for a move back up into a key resistance level. In my case, I closed the trade right there, which was the last bar of the London session. Okay, so as I said, the trade journals are shown to you to illustrate that these are trades that are possible. This is not assessment or a review in hindsight. This is exactly how I trade. If I can do it, anybody can do it. What we're learning here is price behavior, right? We're learning price action because that's what you need to learn. You need to understand how price behaves on any pair. Okay, you need to practice this. You need to go back and look at this chart on your own computer. You need to go back and back test it, and then you need to watch the markets in real time to learn how to identify these patterns in real time. That's the only way. Don't watch these videos as entertainment. You need to study the charts, learn the charts on your own computer, on your own charts, repeat the practice. You got to repeat for yourself the identification of what I'm showing you here on your own charts in real time. Okay, hope the video was useful. I will not talk with you in a future video.